Good morning, good morning. So, this is, like I said, we already introduced ourselves. This is Olga Savelov. I'm from Citizens Bank, and today I want to give you some different pointers. Now, they asked me to train you regarding what happens if the ruling about the commission will take place in July. So the banks trying to help the real estate agents and said, okay, if it does gonna go into the rules exactly the way it's intended, where listing agents don't have to share the commission with the buyer's agent, then the sellers still have the ability to offer 3% and finance that 3% into the mortgage. How are they gonna do it? It's gonna be above and beyond seller concession. This is what's in work right now, but it's not finalized yet because the ruling cannot be finalized yet. So if a ruling will be finalized, the way the banks want to do it is like this. Right now, if you put 80% finance, if you put more than 80% financing on a Fannie Mae seller concession maxed out at 3%. In FHA seller concession maxed out at 6%. If you put 20% down, seller concession max at 6%. If you put more than 20%, let's say if you put 25%, the seller concession of Fannie Mae max out at 9%. Now, let's say you're gonna take a client and he wants to do FHA, 93.5% financing, FHA will allow 6%, credit of a seller concession towards closing costs. Now, you don't have the room for additional 3%. To seller to pay buyer's commission. So the Fannie Mae FHA so far decided that on top of 6% of seller concession, they will allow 3% for buyer to get paid commission.
So, I'm sorry, so the seller's gonna pay for the buyer and the,
They're gonna finance the buyer. So let's say the seller price is 500, right? I say, okay, 3% out of 500 in the sub price, they're gonna add 3% for the buyer's commissions, which they could finance it.
okay.
So before, it was always negotiable, commission always negotiable, but before they advertise how much commission can be paid to the buyer's side. So when a real estate agent brings to the property, they knew that, okay, they're gonna get paid 2%, 3%, 1.5%. Now, they try to take that away. So now they're saying that the buyer have to pay buyer's commission. But what happens if a buyer doesn't have extra money to pay for additional commission? So the bank said, okay, we will allow you to finance that fee.
All the banks are doing?
That's a banking industry trying to find a way to help the real estate off now. It have not been finalized yet because the ruling about commission have not been finalized. But believe me, as soon as the ruling is finalized, the banks will find a way. So they already agreed that if that happens, they're gonna find a way for FHA, Fannie Mae, Freddie Mac.
That's good news.
That's a great news. The only thing they still try to work it out on VA loan. VA loan is basically 100% finance. So they're trying to figure out how to do the VA loan. So that still works. But they already put a groundwork as far as if and when the ruling comes to play, they have the solution to help the real estate agents. So it's not going to be where all of a sudden the buyer's agent will not be able to get paid if the buyer doesn't have the funds. So I just want to give you great news. Since the topic is so small because it's not finalized yet, I put together. Oops, so sorry. I didn't want it to be on a. So I put together a program where Citizens Bank give grants. So we're gonna have 3 to 4 different programs where Citizens Bank gives you the grant, and the grant does not have to be paid back. So that's what I like about this grant. So for example, If you do SONIMA or any other grants, you have to keep property for 10 years. If you live or refinance a property earlier than 10 years, you have to give money back. With our grants, you do not need to give money back. So there's 3 major programs right now that we have, and it's an annual program. So the program for home ready first time, it's up to $10,000 grant. And that grant, it depends where people live, not where people buy. It's a great grant. I just want to let you know that, and it's so funny, Fannie Mae created a map where they want to give a grant. So that map is like really funny. I have one building in, one area in Forest Hills, a little small pocket in the Vigo Park. We just pick up a loan in Manhattan. They getting a grant, they buy for over $1 million property, but people live in where Fannie Mae marked out that they allow the grant. Now, how do you qualify for the grant? You must live in an area that Fannie Mae allows the grant. So Fannie, it's a 3-step check process. You go to, we have a map. Once we get the map, we get a code. If the code matches the Fannie Mae code, so they have like a bunch of different codes. If the code matches with a map code, then you get $10,000 grant. The grant does not have any limits how much income you make. There's no limits how much money you have left in the bank. They're just trying to give people opportunity to buy in a certain areas where they live. Now, you cannot go by zip code. Why does it go by zip code? Because the way the map is broken, it's really a strange way. So in the same block, it could be one house could qualify, another house doesn't.
Why is that?
That's how Fannie Mae creates.
Yeah, but what's the?
We don't know, and they so far, the new program started in November. So far, they've changed it 4 times. So I had a client pre-qualified yesterday, a couple months ago, the one that just signed a contract. About a month ago, they did not qualify. Yesterday they did. So because the map constantly changing and they adding the areas.
Howard, are you the one that checks the map all the time?
So what I did is, in a lot of times, I could give you the map, I could give you the codes. It's just 10-15 minutes to match it. Or you text me the address and I could check it for you. You could have a code, you could have the map, and if it's a match, they have to be where they live, not where they buy. If it's a match, it's a great opportunity. About a couple of months ago, they only did up to 729. They just increased to high balance loan as well. So you could buy one property and finance up to $1 million, 1 unit, and still qualify.
Can we use that grant to get paid the commission with it?
No,
No.
that grant is for, well, actually, you might, it's a good idea. It's a $10,000 could be qualified for closing costs or down payment. So in that particular example I gave you today, so they signed a contract for $1.2 million for the apartment in Manhattan, but they're getting $10,000 credit towards closing costs, and they buy co-op. So I called them, I said, listen, closing costs is not as much as 10,000, plus we giving you 10,000. Our 10,000 you could use for down payment, but the 10,000 sellers gives, it's only 5,000 for closing costs. What are you gonna do with that 5? Because you can't give it back to the seller. So they put in 5,000 for commission. So you can't, but why would you? You have ability to finance a commission if Fannie Mae will come out with a roll. But you can't. You can
No.
use the 10 grand any way you want.
What I'm saying is like, let's say I meet I'm meeting a buyer today and I'm telling you, listen, give me your zip code, I can check to make
It's
it.
not a zip code, just be careful. must be the address.
Yeah.
Like I said, using the zip code, some houses might qualify, some don't. So you gotta check. I could share with everybody the map and the code. I could teach you how to check it, or just text me the address or email me the address. I could check it for you. It's a great opportunity. It really is. The beauty of this, it's not limited how much money you make. It's not limited how much money you have in the bank. You could still get a credit even if you have a big income and large reserves. Because, for example, on the co-op, most of co-op requires you to have 6 months post-closing reserves. So what happened in the co-ops, a lot of people would be eliminated if they were tied in to the assets. Most of the programs, if you have too much assets, you don't need a grant. Most of the programs give you the grant for people who really need it, not just because. In this particular case, it's where people live. So it's a great program. On top of that, they give you $500 credits toward appraisal, and they're giving you $500 towards home not inspection, warranty, home warranty. We close with Maria on this particular program. Right? It works, it's beautiful. And the client said, what's the catch? And there is no catch. There's no something you have to pay back. It's credit is given at closing. So that's really no catch. They have to take a training. It's a home buyer certificate have to be given. What kind of programs is going to be good? 30-year fixed, 15-year?
Tell me about the training that.
It's just online. It's a home buying training. So it's a training may come out as a training saying what kind of requirements you have as a home buyer. You have to make sure you keep up your property. You have to pay insurance. Training just to be a homeowner. It's like a very quick training, and you get a certificate. We have to get the certificate and put in the program because it's a Fannie Mae program. Now, a lot of banks have this program. Fannie Mae gives $5,000 credit. Citizens Bank matches the other 5,000. So that's why we give 10 versus other banks only give 5. Because Fannie Mae gives $5,000 credit. So the good part is it's not only on conforming limits, it's on the jumbo mortgage as well. On a 2-family, I mean, oh my God, on 2-family, it's really high amount. Let's see. So that's on top of any other, let's say if you have seller concession or you have other seller credits. Let's say for co-op, right? Let's say you have to have a higher loan amount. In this program, we still could do credit towards decoration. So that's the beauty of this program. It goes for co-op, condo, and 1 to 4 family house. Now, another program we introduced, it's called Home Ready Very Low Income. So we give up to $2,500 credit. It doesn't matter, it's not tied in where you live. It's tied in, for the Home Ready first, you have to be first-time buyer. If 2 people buy and one is first-time buyer, another first-time buyer, it's still qualified. At least one buyer in a loan application have to be first-time buyer. Now, on a different program, Home Ready, very low income purchase, we give up to $2,500 credit, no additional credit for the appraisal. Eligible borrower have to meet standard home buyer ready program. Now, how does they meet? They meet as a limitation of the income. They have to be 50% of applicable AMI limits. So Fannie Mae come up with each area, they have income limits, and they have to be 50%. So most of the co-op here do not qualify. Because the limits, let's say for New York, let's say it would be like 50,000 or 60,000. It was 50, 60,000. You're really not gonna qualify a lot of people buying a house or co-op in Queens or in Lugano. But the certain areas, let's say, for example, I had a client who's making very little income, only taking $100,000 loan, they might still qualify.
So this one has
Income limit, yes. And the income limit had to be 50% of Fannie Mae area income where they buy. Now, the third program is Destination Home Ready. Destination Home Ready, it's a great program. It's where you buy. It's not where you live, it's where you buy. If the address matches where you buy, then you get up to $5,000 credit, anyway, between $3,000 to $5,000. You could use that credit to buy down the rate. So the beauty of that program is if you're gonna buy in a low to moderate income level, if it's a low income level, the rate is reduced by half a point. If it's a moderate income level, the rate reduced by a quarter. So they have a standard rate and they're gonna reduce it. It's not tied into your credit score. And the beauty of this, if you buy you could buy up to 93% financing, no mortgage insurance. So 93% financing, no mortgage insurance. So recently I had a file where clients were buying a sponsor unit and the guy did not want to put a lot of money in and it belonged to moderate income level and we were able to finance it, no mortgage insurance. So that's a really good program. The fourth one is Destination Home Plus. Destination Home Plus also give you $5,000 credit, grant. Now that's not tied into any addresses. It ties into the income, but it will only be for 3 different areas to purchase. It's Nassau County, it's Detroit, and Suffolk. Did I say correctly? Suffolk. So if you have a buyers buying in Suffolk and Nassau County, Nassau, you would get $5,000 grant, regardless how much money you make and how much money is left. Just because you buy in that area, you're gonna get a grant. And the mortgage insurance on that one.
For that, Destination Home Plus, 5K.
No, I'm sorry. The income cannot exceed 140% of Fannie Mae income. So let's say if Fannie Mae is 100,000, then it has to be 140, but on Suffolk is 140. So we could go up to 107 on the income. They just launched that program last week. You could use that program in 2 different programs. You could use it as a rate pricing as Home Ready, which is rate is about 1/4% lower, or you could use it on a regular Fannie Mae. If you use it in a regular Fannie Mae, then your income cannot be more than 140% Fannie Mae allowable income on that area. If you're using as a Home Ready, which is a little bit less expensive on the rate, then it has to be 80% of the Fannie Mae income level. What did they do on a 3 different locations? They wanna test the market, see if it's gonna boost up people to buy, and they're gonna try to expand the market. So those are 3 different areas where we give the grant, and the grant doesn't have to be paid back. Only on a Home Ready low income, you do not have to be first-time buyer. On all other programs, you have to be first-time buyer. Any questions?
This information is online or?
I probably could share this worksheet that we prepared. And I'm gonna see what I could email everybody. I did it my own, but I'm gonna see what I could send to everybody.
Okay.
Can you stack programs?
No,
So it's
Yeah.
one or the other?
one or the other. So the way we do it, you look where they get the biggest buck back. Because sometimes to qualify on all three, and we're gonna see if the best one is 10 grand. If you qualify, that's why we're gonna give you. For example, when Marie's clients boarded, they qualify on home ready program. And then we switch them to for this program, they reduce their rate more than like almost 1%. And they got 10 grand, and they got paid for the appraisal. They got credit for the appraisal. So what beauty of this is, let's say they missed it, right? It's a very three-step process to check for $10,000 grant. So you check the code, you check the map, then you have to do GU. That's a last step because it's easy to make a mistake when you check the map. If you by mistake move the mouse and it gives you a code and you pick up a wrong code, you might not be right.
For that one, is it where they live or where the
Where
property?
they live.
That one's where they live, so essentially you could use this program as a pre-approval.
Correct.
They could go shopping with that.
Absolutely, and they constantly adding more areas, like I was saying that the client that I took yesterday for a Miller 2 in Manhattan purchase, where they live, a month and a half ago, they did not qualify. But they gave us a new map codes, added code that now they qualify, so we check. Even through the process, we triple check to make sure the codes don't change. Sometimes they remove, sometimes they add. Now, the question always said, what happened if they remove? So we're gonna try to lock the rate, so if they remove, once we locked in, then they can't change it. So it's, like I said, it's a great program, no strings attached, and
Are there general, I'm sorry,
Sorry, go ahead.
are there general locations for this to work already, or just?
low to moderate income level, how it places. Now, with that said, you would think that whole Jamaica could qualify. No, it doesn't. With that said, I have some Regal Park pockets that qualify.
Okay. So
You said that rates can also be reduced by up
Yeah.
to 1%.
1%,
It's a 1/4%?
yes.
Okay.
Or depending on the program. On this program for 10,000, the rate January is 4% lower because you price it as a home ready. Even though you don't qualify for home ready, the pricing is given as home ready.
Which program offers the biggest reduction in rate,
I think home ready,
which is a 1/4%?
which is 4%. And the beauty of this one, right? It's not tied into your credit score. So if you have a buyer with a credit score of 711, you have 3 levels of adjustments. On this program, it doesn't have any adjustment to the rate. And the beauty of this, let's say condo, right? If on the Fannie Mae you buy a condo, there is a 0.75% fee if you put less than 25% down. In this program, there is no adjustments to the fee for the condo. So you could put 20 or 15%, and you still, and your mortgage insurance lower at the cost than any other program. So they give you a lot of incentive for people to put lower down payment and get a lower income and then a lower interest rate and get you the grant. Now, will everybody qualify? No. For example, I had a case where I pre-approved Michelle's buyer and they qualified. By the time they signed the contract, they no longer qualify. So
What change?
the codes change.
The what?
Codes constantly change. They add, they subtract, they add, they subtract.
Without warning.
No more,
That's no good.
no more, but when it added is really good. When the subtract is,
The 10,000 credit, that run is for home rent.
it runs in home rent.
So, we don't like to lock people in before they're buying the property, but you're saying
We can,
in this situation, it's better to, if they're going to use the program.
correct, we can, so the beauty of this, if you buy co-op, we can lock you for 90 days at no extra cost. Right, and you have 30 days to find a property. But sometimes 60 days is not enough, so,
Process.
hmm?
It's not enough.
It's not another process, so then you have to build in extension costs.
How
30
much
days,
is it to lock to
Huh?
start? How much is it to lock to start?
nothing,
Nothing, so it would be just the extension that you have to. pay.
you just have to pay extension.
Yeah, with that,
Or the beauty of this, like, let's say right now, we're in a down escalator. So if you're on a down escalator and the rate at the time of expiration, the same as when you locked it, you could get re-locked at free for 50 days. Or you could just let the rate expire and re-lock for 30 days, no cost. So it depends where the rates are, but right now, so what happened last week? Last week on Monday, Tuesday, rates shoot up, almost a 4%. Because anticipated Fed meeting has bad news. So the Fed met, but there was no bad news. So as soon as the Fed meeting happened for last 2 days, and Wednesday and Thursday, rates went down 0.25%. And now they continue sliding down. So we were at some point, we went way over 7%. Now, on a first-time buyer program, on Home Ready, we are back at 6.75. On a regular program, we are like about 7%. So it's really going down, so far we're back on the down escalator.
Olga, I wasn't sure on the no mortgage insurance with 7% down payment.
3% down payment,
Or 3%.
3%.
No mortgage insurance?
no mortgage insurance. That's on
Destination.
a destination home and destination home plus. So if you guys have a real estate agent, you're working with Suffolk or Nassau, great program. Because with 170,000, you can buy a $600,000 house, $700,000 house. You could put 3% down and no mortgage insurance, and the rate is very good. And you get $5,000 credit
You mean in Long Island?
in Long Island.
I hope you plan.
So the way we qualify, right? On all the programs, we have to run desktop underwriting. And the desktop underwriter will come back and tell us if the code you pick that matches the Fannie Mae code does match the system. So sometimes if you made a mistake, GU will pick it up. So when we pre-approve it, we have to run GU. Well, we have to run GU for pre-approval period, but we must run GU to make sure it does qualify. So the way I set it in the files, I give them the map with a code. I printed the Fannie Mae code, showed it's a match, and then I do GU and cut down, say, look, GU approved. And then I could tell the client, you got the 10 grand, go shop.
and just to confirm, is four programs, right? So
Four different programs.
So Home Ready, Destiny, Home Ready.
Home ready, so you have, so I'll give you the codes of the names of the programs, right? And they all Fannie Mae programs. It's all, the last program, Fannie Mae is just working with Citizens Bank. They did not give to every bank. So it calls Destination Home Plus. Then you have Home Ready, Very Low Income Purchase, which is abbreviation VLIP. Then you have Home Ready First. Let me give you the abbreviation for the program. So the abbreviation for that program is FNMA, Fannie Mae, SBCP,
SCP.
and SBCP. So the destination home plus is Nassau County, Suffolk, and Nassau County and Suffolk County in New York. Home ready may not exceed 80% of AMI or 140% AMI. So those are great 4 programs that help you guys for your presentation. What I could do is I'm gonna see if marketing department could give me a different flyers for each program, so you could put it into your presentation.
I think that'll be a good idea.
Instead of doing one, I could give you separate because it's not one size fits all, okay? If, again, email me who wants to get a map and a code. Yes, sir,
Exactly.
but you gotta email me.
I will email.
Please, because some people want, some people don't want. If you guys email to me, I'll send it to you and I'll teach you how to use it. Or if it's too much trouble, shoot me the email and I'll check it for you.
The quote you sent me last time, they don't work on them?
No, they changed.
Oh, they changed.
Yeah, and
But
they
the process-
constantly change.
But the process of searching is still the same.
Still the same,
Oh, sorry.
still the same, and a very easy process. Now, we still have more time. So what I also prepared for you is challenges we come through regarding project approval, whether it's condo or co-op. And I'm going to explain to you why banks having a lot of challenges now to approve the building. Number one, the biggest change happened in September. Fannie Mae added a Fannie Mae addendum. The Fannie Mae addendum to co-op questionnaire talks about, talks about, if you guys don't want me to talk about it, give me a different subject. And
I'm not saying that, I was shaking my head because the questionnaire is so lengthy.
Yes, so this used to be a regular questionnaire, and used to be where banks could share questionnaire from one another. They cannot do it anymore because each bank have its own questionnaire that they have agreement with Fannie Mae to sell the co-op. And I know that not every one of you sell the co-op, but it's good idea to know, because if you come about the co-op and you're getting challenges, you could understand why. And it's not one bank versus another, it's every bank. See, Michelle's kids don't check that. It's every bank will have challenges. Why? It's because, what happened in September? In September, Fannie Mae decided in New York, they're gonna put the same guidelines as they did for Florida. Couple of years ago, as you remember, they're building a pretty new building collapsed in Florida. The whole building collapsed. So they didn't touch New York with the new requirements. But we got a building collapse in Bronx. So as soon as hit home, New York State and New York City put a lot of guidelines for every building. So New York City said that every building have to go through inspection and they have to pass the inspection. Now, Fannie Mae said, oh, listen, we have not touched New York for a long time. We want to make sure each building is in compliance with inspection report. So what did they do? They created a called Fannie Mae addendum. Now, if we're gonna sell to Fannie Mae, we must present Fannie Mae addendum. Now, Citizens Bank, we don't always sell to Fannie Mae. We could portfolio loan, but the minute we give Fannie Mae addendum and it has a problem, we have to follow the same rule. If we give it to the portfolio loan, we don't have to give to amendment. Now,
You say if you give, you give the amended,
addendum.
addendum, what is that?
So that's an additional questionnaire, it's called addendum. So the Fannie Mae had a questionnaire, but in September, they added the questionnaire, they called it addendum. Why do we not combine it together? Because not everybody sells to Fannie Mae. So if you don't sell the file to Fannie Mae, you don't need to give addendum.
So who decides who you're gonna sell the loan?
It depends what program they qualify.
Okay.
So if they qualify for conforming and high balance loan, you could do it under Fannie Mae. If the project is not approved, for example, right? If you know there is a problem, then we could qualify in the portfolio under, so in the portfolio level, we might not have to ask you a addendum. But it has to be 10-year interest only. On the conforming limits and a high balance, we cannot do on a regular program, we have to do an interest only.
Okay. I was going to ask you something. Okay, but this rule that changed in September, is it for mid-rise or only high rises?
Every building,
Every building,
doesn't matter
I
how
was
you
told
live.
that up to 6 you don't have to, then if it's a high rise, then you have to do.
No, it's every building. You have a building for 2 floors, you have to make sure that inspection took place. And it's not only Fannie Mae rule, it's a state and a city rule, they have inspection.
That was the problem we were having in that building.
Correct, correct. So, and now, because it's new, management puts a lot of resistance. Anything new, management puts a resistance. They said, wait a minute.
Why?
So let me give you an example of questions on addendum. So the most important part they ask is when the last inspection took place. If inspection was done more than 3 years, we want to see the meetings notes, the board meeting notes. Why? Why do they want to see board meeting notes?
To see if there was any issue in the building that they were
Correct, that was
discussing.
discussed, and so that was the biggest thing that we got resistance. We are not giving you building notes, so it was a lot of arguments between the banks and the management. So now, a lot of banks said, okay, you don't want to give me building minutes? Give me, they said, no, only building minutes if you come and read the minutes in the office. So they designated an attorney, internal attorney, to read the minutes.
To go to everybody's office, everybody's building's office and then read the minutes?
Right, so sometimes, if there's no inspection last year, but a lot of buildings did have inspection. So I had some questionnaires answered by management that says, yes, we have the inspection and we have no problem in the inspection report. So we took their word for it, but then Fannie Mae, when they bought the deals, they said, wait a minute. In the building department, it shows there is violation. So now, whenever questionnaire comes back, we double check with the building department. So we go to the building department, we put the address and we put the report and we see if it says report was done, there's an issue, but it's not unsafe. We are okay, we still look at the minutes to see what is going to require. And then we cut and paste and send it to the management, say, wait a minute, you answer no, but building department shows that you have fence issue. There's 2 places we look as a problem. The fence of the building and garage. So those 2 sticky points, right? So I had the client, management answered, no, we have no problem, but an elevator. And they had unsafe inspection report showing that it was unsafe. If we get the report unsafe, the building is not qualified. sometimes when the report is given, they give them a deadline to fix the issue. So I just picked up another one, where the realtor gave me, and when we already processed the loan, he said, oh, you have to, I said, okay, now you have to pay for questionnaire. So the client came back, said, wait a minute, I already paid for questionnaire. So what do you mean? He said, I paid questionnaire for another bank. I said, okay. Then why didn't you just finish with that bank? Why did you come to us? He said, oh, they declined the building. Oh, wait a minute. I said, building is not Fannie Mae approved. So what do you mean? Give me the questionnaire. So I reached out to the manager and said, listen, the guy paid for questionnaire. Give me a questionnaire that he paid for, and I already have financials. I will check if you could do the building, because if it's not Fannie Mae approval building, I don't know if I could switch you to portfolio. I want to know what was the problem that was not approved. So when I got the questionnaire, there's 3 issues we saw. Number one, sponsor owned was 28%. Fannie Mae sponsor ownership is 20%. We at Citizens Bank have extended approval with Fannie Mae. We go up to 40%. So if you have a building with sponsorship up to 40%, we could do the deal without getting Fannie Mae approval. We already have Fannie Mae approval. So that's why we were able, I looked at it, I sent it in, and they said, we don't see a problem with that, we don't see problem with financials, but the project department right away went to the building department without even asking for the inspection, said, okay, let me, before you bring the loan in, let me see if there is inspection were done. And it was unsafe on a facade. So I emailed the management, I said, according to inspection report on a cut and paste, you have unsafe on the facade, and you must fix it by September 2024. We could do the deal in the building as long as it's already fixed. So she came back to me, she said, oh, we just finalized it. We no longer accepting management work. Now we gave them more questions. Where, how much it cost? When did you start it? When did you finalize it? Because we noticed that management doesn't always respond correctly. So, another question here, it says, did the last inspection have any finding related to safety, soundness, structural, or habitability of the project building? Most of the management always say what? No. So we go to building department and we look at the report and see if there is any issues. If yes, have recommendation repair replacement has been completed. If it's safe, let's say they recommend to do the sidewalk. So on my co-op, they recommended to change the sidewalk, but it still gave a safe finding. We just want to find out how much it will cost, where it will be repaired, and they have money to fix it. We also look at reserves. In the past, we never looked at reserve for a co-op. Now every co-op must have 10% reserves. We always ask for the most current budget. So I had another bank call me and said, I can't get the budget from from management. I said, look at financials, because a lot of times on the financials, on the last couple of pages, they put the budget for next year. So for some reason, management wouldn't give the bank a budget, but they do have the budget, and they sometimes put in the financials. So you just know how to navigate the stuff. Is HOA corporation aware of any deficiency related to the safety, soundness, and structure of the building? If yes, please, what are definitions? Of those definitions, what repairs, replacements remain to be completed? Safety, building safety. Are there any outstanding violation or just jurisdictional requirements, zoning, ordinary codes, related to the safety, sound, structural integrity, and habitability of the project. So there's a bunch of questions related to safety of the building. And like I said, if you go for Fannie Mae, it have to be answered, and it have to be signed by the management, and it's going to be verified by building department. So when I request this amendment, I always tell the management, oh, by the way, we're gonna cross-reference with building department, please give us as accurate information as possible. Most of the management not getting on board with that, because it's not only our bank, it's every bank. Every bank who's gonna sell to Fannie and Freddie going through this process. It's a very painful process, especially when we took the first deals in September and October. And Maria could attest to that, because management does not want to release information, because a lot of times they write a note saying, oh, inspection reports is a private information for the building. So when we get that, then we have authority just to go to building department and pull a report and ask them questions. So those are things. Another red flag on the co-op approval. So insurance, crime and fidelity insurance, it have to be 3 times over maintenance. So let's say your cost of the let's say your maintenance $9 million. Then you have to take 3 months of $9 million. That have to be the limit on your crime insurance. If your crime insurance, let's say if your financials are done before crime insurance expires, we just need a management confirmation. They're going to increase the crime insurance policy. So I had a file given to me by Chase. They did not want to do the file because the crime insurance were only off by $15,000. The seller was willing to, and it's $50 a year for increase of the insurance. Management said they will not increase it. So we took the deal and we said, okay, we're going to have the same problem as Chase. But if you give me a commitment that in September when it's expired, you're going to increase the core, to make sure that insurance is enough for crime coverage. And they said no. So the seller was willing to pay 10 years of the crime insurance increase. The buyer was willing to pay, and the management said no. And unfortunately, we also had to decline the bill for $50 a year. So for me, it was speechless. All attorneys were speechless. Buyer and seller was speechless, but the management said we will not, and they put it in. We will not increase, have your buyer pay cash. So sometimes, I'm sure in a couple of, a couple of months, they will have to increase because they can't finance the building. And they're not going to be able to finance in a regular Fannie Mae or portfolio lenders. Any other questions? Did I give you too much information?
Good information.
Yeah, it's great information for sure.
Because a lot of times behind the scene, we as loan officers have a lot of, especially with co-ops, we have a lot of issues we have to deal with. And in here in Citizen Bank, we only involve realtors where there's a big problem. I told my team is anytime we don't get a response, let the realtors and attorneys know right away. Because we don't want to wait until last minute until you pass the board, still have a problem. So we will let you know if we have an issue with approving the building. Because right now I have another file where the issue was unsafe report, and they said that, they're in the process of fixing it. until we don't have to wait until it's filed as a safety. We have approved that they pay for this repairs, it's done the repairs, we have inspection report, it's done for repairs, but it's not clear from building department, we still could finance this deal.
You're giving us your email or?
Yes, my email address is Olga, OLGA. Period. Dot SAVELOV at citizensbank.com. Let me write it here. Can you read it? Can you see it?
Yes,
Yes.
we can.
Thank you.
Yes.
Olga. Savelov at citizensbank.com.
Olga, what is Penny Mac loan services?
Patty? No.
Penny Mac.
Very much. It is a different,
Is not the
it's
same,
not very.
at the same level as Fannie Mae?
They might have some differences.
Pretty much.
We don't have the penny map.
Okay, so question was, that has anything to do to be able to get this type of grant or no?
Those grants are Fannie Mae grants. That's given by Fannie Mae. So they have to qualify for the Fannie Mae guidelines.
Program.
Yeah.
Got it. Interesting.
Yeah, no, there's a, and as we go through this year, it's gonna be a lot more programs added on. Because they want incentivize buyers to buy.
So the one question, going back to the commission, so all the banks are aware of the commission's change?
They're working, the whole banking industry working on that. So it's, if they're aware or not, it doesn't matter because it will come from a higher authority.
Everybody.
It's gonna spread out to all the banks.
Okay.
When will happen? As soon as the ruling gonna pass. So as the ruling pass, they might make some adjustments, but they just letting you guys know that they're working towards to make sure there's a way to finance it if you have.
So that's great. I think
It's a great opportunity, yes.
because right now, it's like, whatever the MLS pays, whatever you can
Correct, and remember,
negotiate.
anytime you do sell a concession, you have to appraise the sell concession. This one doesn't.
Okay.
So that's a huge advantage, huge.
That's great for us. For the buyer agents.
Well, you have a team who are doing buyer's agents, so it's gonna be good for them.
Yeah.
It's not gonna discourage realtors to continue working. They don't have to exit
I mean,
industry.
with much better before you have to really work into the buyer agreement.
Correct, and buyers are not used to pay commission.
Yeah.
So what they're doing is they're gonna have a seller. Put it in a such a, I don't know how the wording will work.
Yeah.
But it's gonna be where a sell price of 500, and if they have to pay 3% buyer's agent, put it in on a separate line, so it doesn't have to appraise with that cost.
Oh, that's great.
We just have to make sure that we're allowed.
Yep. Guys, do you have any questions?
I think it's very important to partner up with, with an lender like yourself, so that we, prior to getting into any project, especially for golf, do all research and make sure.
If you send me the address, we have a database, right? Now, doesn't mean that if it's not on a database, it's not approvable. The first thing we could do is take a look at the building department. If there is any violation, if there is unsafe violation.
Oh, yeah.
This, we know it's a red flag.
Yeah.
And we ask management, how fast it could be fixed? What it cost to be fixed? We have a budget to fix it, so it requires a lot of questions. So I was working with Melody on one of the buildings in Harvard building, right? So another. So another concern for a the project approval is when is your underlying mortgage expires? So as soon as she gave me a client to pre-approve, when I looked up the project, I have a database, I plug in the address of the name, it comes in and says the expiration date on every line of the project. And then I look, underlying mortgage expired April 1st. We need 6 refinance project expires. So I told Melanie, I said, Melanie, in this project, if they don't refinance, we cannot close. So I reached out before client signed the contract, I reached out to management, I said, listen, according to the notes, your underlying mortgage expires April 1st. She said, don't worry, within 2 months, we're gonna complete the refinance. So we took the loan and so they did not refinance April 1st. They got extension for 30 days and they just refinanced. So that we cleared the project. So it's a lot, it's not one thing. It's a lot of components in the project approval that we have to look. You know, sometimes it's we spot check, but we're not a project underwriter, so we always rely on the project.
Oh.
The best part is we have a list. We know how many units, how many is sponsor owned, how many sponsor rent control, how many investment property, because the rule of Fannie Mae, you must have 50% owner occupied. Not less than 50%. If it's less, it could be a problem. Now, the beauty of the Citizens Bank, we have non-warrantable co-op approval.
You have one?
Non-warrantable, that means it might not qualify for Fannie Mae, but if the file is very strong and it has compensating factor from a building perspective and from client perspective, we might entertain financing, but it's on a case-by-case basis.
Thank you.
Thank you. Any other questions? Was it helpful to you?
Yes, absolutely.
It's very
I have some breakfast, have some breakfast.
I gotta get to work.
Go to work.
But thank you.
Thank you.
Grab it and take it with you.
Yeah, I have a great bagel, so that just baked this morning. From go get a bagel and they have cream cheese and I have a tuna fish salad